Hello everyone, welcome to EduTap and welcome to Finance 360-degree session in which we cover the relevant and important finance current affairs and the RBI notifications, the RBI press releases. Okay, so in today's session we are going to cover two very important finance current affairs, and this is a very important notification that we are going to cover in today's session. But first of all, give me a thumbs up if I am clearly audible and visible. So the first news article is regarding the SEBI that has introduced or that is going to introduce the SEBI check, as well as it is going to introduce the validated UPI handles. Okay, just a second. Okay, so this is the first news article that we are going to discuss today. Just give me a second. Okay, so this is the first news article that we are going to discuss, that is SEBI has introduced SEBI check tool to check the validated payment handles and such. So what are the validated payment handles and why the SEBI has introduced this SEBI check and the validated payment handles, that we are going to discuss. The next news article is regarding the RBI that has increased the agency commission. So why the agency commission is given and what is the increase that has happened in the agency commission. Both these news articles we are going to discuss in today's session. Okay, so let's get started, but before that, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so now starting with the first news article, that is the SEBI has introduced the validated UPI handles and SEBI check for the secured payments by investors. See what was happening. So try to understand the background so that you can understand this better. So what was happening, that there was, let's say there is a mutual fund in which you want to invest, or there is a small and medium real estate investment trust. Okay, so you want to invest in certain mutual fund, or you want to invest in the small and medium real estate investment trust, and you go to Google and you search the mutual fund or you search the small and medium real estate investment trust. So now you will see that, okay, a website looks very good. Now this website, let's say this looks very good. This is for the small and medium real estate investment trust, and it is showing you various schemes in which you can invest. Now you have invested the money in this small and medium real estate investment trust. Many of the investors, they have invested their money in this particular SM REIT. Okay, and it is written that it is regulated by SEBI, so you are trusting this website and such. Now after a few months, after you have done a lot of investment, then you realize that, okay, they are not picking up your calls, they are not answering, or you are not able to get back your money because the entity has run away with the money, and this was a fake entity. This was actually unregistered, or this was not registered with the SEBI. Okay, or let's say you are going to a broker. Now usually we have Zerodha, Grow, IND Money and such applications through which we can invest in the different shares, in the different bonds, in the different instruments. But there are brokers that are like offline brokers are also there, where you can go and you can discuss with them regarding the investment. Okay, so there are various offline brokers also. Okay, and I have a friend, let me tell you the real life scenario. She does not like to invest through the Zerodha or Grow. She has just gone to this offline broker, and she is doing the investment through the offline broker, and the broker has said that, okay, we will provide you 10 or 20% of the returns on your money. Okay, now let's say you are going to an offline broker and you are investing the money. Okay, you have invested the money. Later on you realize that this broker was not a certified broker. This was not registered with the SEBI, and the broker has run away with the money. Okay, you had done the UPI payment, but now it is not of any means, or you are not able to retrieve your money because you did the UPI payments, but the account was linked to some other person and the money laundering has happened, or the fake account has been used and such. So you can understand that how cumbersome this process is for the investors. They invest their hard-earned money, but they can get cheated very easily because the fraudsters, they are becoming more and more intelligent in cheating the people. Okay, as well as with the usage of AIs, it has become easier to develop such kind of websites, to develop such kind of things. Okay, so SEBI has announced a significant initiative to enhance the investor protection and combat the unauthorized money collection in the securities market. So let's understand this. First of all, who collects the money or why they are collecting the money from the investors? So there are certain investor facing intermediaries that are allowed by SEBI to collect the money from the investors, such as your real estate investment trust, small and medium real estate investment trust, portfolio managers, the mutual fund, infrastructure investment trust, investment advisor. They provide you the advice, so they take the money and they keep on doing the research for you. So research analyst, depository participants across the depositories. So there are two depositories, NSDL and CDSL. So across these two depositories, there are depository participants. So depository participants, they connect the investors with the depositories, okay? Or the depository participants, they open the account of these investors with the depositories, so these investors can maintain their securities in the demat form with the depositories, okay? So they also charge certain maintenance charges, or they also charge certain money. Now banker to an issue and stock brokers across segments. So these are the intermediaries that are investor facing, that can collect the money from the investors, okay? Now it is said that there is problem that is coming, impersonification that is happening, so we will understand this better, but these are the investor facing intermediaries. So now effective from October 1, 2025, the SEBI has said that we will introduce a structured and validated UPI address mechanism that will be helpful for the investors, okay? So what is this? We will understand this in the coming slide. So let's understand this, okay? So new initiatives, first of all, I hope you are able to see this. So new initiatives to safeguard the investors. The SEBI has taken the new initiative to safeguard the investors. In recent years, the unregistered entities have increasingly misled the investors to collect the money from the investors in the name of the other entities, okay? So in recent years, the unregistered entities have increasingly misled investors by collecting fund without any authorization from the SEBI, without any authorization from the Securities and Exchange Board of India, and often siphoning off these amounts for personal gain. Okay, so let's say you are trusting an entity that is saying that it is small and medium real estate investment trust, and you are paying in the UPI ID of this small and real estate investment trust, you are paying the money. Okay, you are paying 2 lakh rupees or 3 lakh rupees or 5 lakh rupees on the monthly basis you are paying. Okay, now after a few months you realize that okay, this entity was not registered with SEBI, and now you are not able to get access to this entity, and the UPI ID, this was connected to an account that is not that is not linked to this particular entity now. Okay, so because the accounts, let's say in the name of some farmer, in the name of some small vendor, the account has been used by the entity. So this also happens, right? So this new framework, now the SEBI has brought a new framework in which the UPI handles will be validated, and the validated UPI handles will be provided to the intermediaries. So this new framework is designed to proactively curb or reduce such fraudulent activities, enabling the investors to easily identify the legitimate SEBI registered market intermediaries, SEBI registered entities, and make payments to them securely and efficiently. So we will discuss that what is this UPI handle, but I hope you understand that this new initiative to safeguard the investors. Why was this taken? First of all, because of the unregistered entities siphoning off the money, taking the money from the investors, and as well as there is also what was happening, that to address this growing issue of impersonification. So impersonation was happening, that let's say some entity was impersonating as Zerodha, or some entity or some individual was impersonating as a broker, as another broker, and they were collecting the money from the investors. So to address this growing issue of impersonation and enhance the investor confidence, SEBI has mandated a new UPI address structure for all the SEBI registered entities who collect fund from the investors. Okay, so what is this UPI handle, that we will discuss, and this new UPI handle, this new UPI structure will help the investors to identify the actual intermediaries connected with the SEBI. Okay, so this innovative mechanism is set to significantly improve the safety and accessibility of financial transactions within the securities market by providing a verified and secure payment channel. Okay, so we have understood the problem, impersonation as well as unregistered entities siphoning off, taking the money from the investors, and now the solution has been brought by the SEBI to bring the new UPI handles. Okay, so let's understand about this UPI handles or the validated UPI address. Okay, so understanding the validated UPI address now. So first of all, username. So this will be, see, this is the kind of address that the entities will get. So SEBI registered entities that collect the funds from the investors, they will get this kind of handle or this kind of UPI address, okay, to collect the money from the investors. So first of all, the first part of this address will be the username. So this username, this will be a readable name chosen by the intermediary, followed by a mandatory suffix that clearly identifies their category. So here, let's say this is a ABC entity, okay, and it is a broker. So the entity is ABC dot broker. For the broker, the suffix is BRK. So this is going to be the username, the entity name dot the like what it is working as. It is working as the mutual fund, so MF will be the suffix. If it is working as the broker, BRK will be the suffix, dot BRK or dot MF. Okay, so this is the idea. So in the username, in the first part of the address, the username will be the entity's name or the entity, whatever the name the entity has selected, that is readable dot BRK or MF or whatever it is working as. Okay, so here we saw, so these are the different suffix for the different usernames, okay, for the different entities, for the different intermediary types, we can say. Okay, so for the depository participants, DP will be there. For the research analyst, RA. Okay, so these are the suffix that will have to be added by the entity if it is a broker, if it is a research analyst, if it is an investment advisor. Now coming to the next part, that is the handle. So exclusive @valid handle, the handle will feature a unique and exclusive identifier, that is @valid. So once you see this @valid, you will be able to understand that this is registered with the SEBI. Okay, so the handle will feature a unique and exclusive identifier @valid combined with the name of the self-certified syndicate bank, that which bank is collecting the money or where the money is going. So the bank name will be there or the bank handle will be there, like for the Citibank, CTI, or for the SDFC Bank, HDFC, for the Axis Bank, AXIS, or for the Yes Bank, YES. So such kind of bank at the end, the bank name or the bank suffix will be there. Okay, so this is the idea, that in the username, the entity's name dot whatever the entity is doing as the broker or mutual fund or research analyst and such, then there will be the handle name, that is @valid, and then at last the bank name. So this is the idea. Okay, now these validated handles will be exclusively allocated by the NPCI. So remember this, that these validated handles, so these handles @valid and the bank name, so these handles will be exclusively allocated by the NPCI only for payment collection by the SEBI registered intermediaries. So this kind of handle will not be given to any other entity. It will only be given to the SEBI registered entities that collect the funds from the investors. Got it? So this is very important point. Next is visual verification. So to enable easy identification of the legitimate transactions, investor will see a clear visual cue where a green triangle will be there and in between there will be a thumbs up. So here you can see this kind of QR code will be released for the entities, where they will, like in between the QR code you are seeing the Q, that is a triangle, green triangle with the thumbs up. So this shows that the transaction is validated or this transaction is with the registered SEBI entity. Okay, to ensure the easy identification of the legitimate transactions, investors will see a clear Q, a thumbs up inside a green triangle icon when making a payment to a registered intermediary through this new handle. The icon's absence, let's say this icon, this green triangle is not present, so the icon's absence would caution the investors of the risk that they are making payment to unauthorized entities. Okay, now so mandatory QR code, intermediaries are also required to generate a QR code that is mandatory, that will have the thumbs up logo for the investor convenience. So this is regarding the whole idea of the validated UPI address. Any confusion here, anyone? So here you can see that, let's say ABC is the name of the entity or the ABC is the short name of the entity. The entity is working as broker, so .BKR, that is for the broker, @valid, and the account is with SDFC. Okay, or now XYZ is the name of the entity. XYZ, now it is a mutual fund, so .mf @valid, and the bank is with which it is connected is SDFC. So SDFC. Okay, so this is the whole idea. The username, the exclusive valid handle which will be provided by the NPCI, visual verification is there, mandatory QR code with the icon. So this is for the safety of the investors, because what was happening that we have discussed, because there were unregistered entities that have increasingly misled the investors to siphon off the money, as well as there was impersonation that was happening, that the actual, let's say you trust Zerodha, you trust Grow, so in the name of these entities there were misleading websites that were being created, or the money was being taken, okay, by impersonating as the authentic intermediaries. Okay, so this was the idea. Now coming to SEBI check. Okay, so we have discussed about the validated UPI address. Now we have to discuss about the SEBI check tool. So as the SEBI has said that they are also going to introduce the SEBI check tool. So what is this tool? Yes, Prakhar, this is for collecting the money from the investors. Okay, that's why there is a QR code now. So introducing the SEBI check, and now you will understand the whole flow also. So introducing the SEBI check tool. So this upcoming tool will allow the investors to verify. See what happens, that let's say the abc.bkr valid @SDFC. So if this kind of UPI ID is there, or if this kind of UPI address is there, is this correct for collecting the money by the intermediary? This is not correct. Now the fraudsters, they understand that the people might have the basic idea that okay, this is a kind of like valid should be in the handle, and the people are a little aware about it. So they might change something, a minute thing, like they might delete this cross, or they might write valid @ rather than @valid. So just by changing a little thing, even the non-intermediaries or even the entities that are not registered with SEBI, they can also have this kind of handle, they can also have this kind of address that is very similar to the actual address that is given to the entities. So you can understand that this can, like, fraudsters can bring out new ways to cheat the people, to cheat the investors, and that's why the SEBI has said that we are also bringing the SEBI check tool, so that there is a two-way protection. One-way protection is to bring this UPI address, to bring this validated UPI address, and to provide such kind of QR codes that have this icon, but the SEBI know that the fraudsters can bring the new ways to cheat the investors. Okay, so that's why the SEBI check tool has been brought, in which you can verify the authenticity of the UPI IDs, that this UPI ID, is it authentic or not. That means this UPI ID is actually related to a SEBI registered intermediary or not. So to verify the authenticity of the UPI IDs, either by scanning a QR code or by entering the UPI ID manually. So here you can see that this is the kind of SEBI check tool that is going to be brought, where you can use the photo, where you can scan, like where you can take the photo of the QR code, or where you can type the UPI ID. Okay, so here you can see that you can take the photo of the QR code, or you can write the UPI ID. So once you have put in the QR code, or you have put in the UPI ID, then you will be able to see that yes, this is a verified UPI ID, and this is the broker, and this is the name of the entity, and this is the registration number of the entity. So if the details are given in green, that means it is a verified entity and you are making the payment to a verified SEBI registered entity. But if the details are in red, that means it is not verified. That means it is not verified. The UPI handles has some problem, or the UPI ID has some problem. Understanding this point, so introducing the SEBI check tool, the SEBI recognizes that the fraudsters might change the name or tweak the UPI handle a little, or they can tweak the UPI address a little, and they can cheat the investors. Okay, because not all investors are seeing these kind of sessions, right? They don't know that how the process works. So to verify the authenticity of the UPI ID, either by scanning a QR code or by entering the UPI ID manually, they can check the authenticity of the entity. They can check, they can verify that the entity is SEBI registered or not. confirm the bank details such as bank account number and IFSC code of a registered intermediary also, that the money is going to the account of the intermediary or the money is being siphoned off to some other entity. Okay, so they can check the details also. They can check, like through this SEBI check tool, they can check the account number and the IFSC code of the entity also. Now both validated UPI addresses and SEBI check shall be available to users with effect from October 1, 2025. So effective October 1, 2025, SEBI will introduce this structured and validated UPI address mechanism featuring the exclusive valid handle for all SEBI registered investor facing intermediaries. Okay, so remember that this @valid handle, it is only for all the SEBI registered investor facing intermediaries. Any confusion? This is the first news article that we have understood. So here you can see the process flow. So first of all, the circular has been issued by the SEBI. So now SEBI has said that NPCI will be providing the handles. Okay, the NPCI will be providing the handles, and the handles will be @valid and the mark of the syndicated bank, the mark of the bank. Okay, so NPCI issues the communication to banks and allocates the handles to the bank. So let's say the handle is provided to the SDFC, that is @valid SDFC, or the handle is provided to the Citibank, that is @valid CTI. Okay, so this is the idea. Now changes by banks will be made. The banks intermediaries request, so changes by banks will be made. Banks will recognize this handle for themselves, and then bank will request the intermediaries to connect with them to take the new UPI addresses. Okay, so intermediaries request for @valid UPI IDs to their banks using SEBI intermediary portal. So through the SEBI intermediary portal, the intermediaries will raise the request with the bank that okay, we need the new UPI address with this handle. Okay, let's say you have an account, or let's say the intermediary has an account with the SDFC bank. So intermediary through the SEBI intermediary portal will raise the request with the SDFC bank to provide the intermediary with a new UPI address with this new handle. The bank confirms the request. Now everything will happen through this SEBI intermediary portal, because in this portal only the registered SEBI intermediaries can access. Okay, only the SEBI registered intermediaries can access this SEBI intermediary portal. So there is less chances of the fraudster entering these kind of portals. Okay, so bank will confirm the request after login to the SEBI intermediary portal and allocate the handle to the intermediary in their system after verification. So now intermediaries are notified for the approval that they have got the new UPI address. I hope this is very much clear. Now Vajra, this is the system through which this whole process will work. So Vajra is the validation and authentic joint reconciliation architecture. So this is the architecture through which the whole process will flow smoothly, and the SEBI check and the UPI handles will work smoothly. Okay, so this is the idea. I hope this is very much clear. The whole flow. Is there any confusion in the flow? So this is it for the first news article. If there is any confusion in the flow, you can answer, or you can ask the question. Coming to the next news article. No confusion? Okay, now coming to the payment of agency commission. Now let's say that the government has to pay pension to, let's say, 1 lakh individuals, or the government has to collect taxes from 1 lakh individuals, or the government has to provide scholarship, because government also provides scholarship now to, let's say, 2 lakh people. The government has to collect the fees and fines from multiple individuals. So government, is it doing by itself? Is government or the government employees, are they going to house and collecting the payments, or they are giving the pension? Is the government doing it? No, it is through the Reserve Bank of India or through the agency banks. So Reserve Bank of India, so basically the Reserve Bank of India carries out the general banking business of the central and the state governments, because the government cannot go to each and every house to provide the pension to the people, and government cannot go to each and every house to provide the salaries or to provide subsidies or to collect the taxes and such. Okay, so the Reserve Bank of India carries out the general banking business of the central and the state government, in which the RBI collects the payments and RBI collects the receipts and RBI provides the payment. Okay, now the RBI itself cannot do the whole thing for the central government and the state government. So RBI also hires the agency banks. So basically RBI carries out the general banking business of the central and the state governments through its own offices, as well as through the offices of the agency banks appointed under the section 45 of the RBI Act of 1934 by mutual agreement between the agency bank and the RBI. And the agency banks are not providing their services for free. They want money against their services that they are providing. Okay, so RBI pays agency commission to the agency banks for the government business handled by them. So the agency banks that are handling the government business, that are collecting the receipts on behalf of government, or that are making the payments on behalf of the government, so agency banks, they take the agency commission from the Reserve Bank of India. Okay, and RBI carries out the general banking business through its own offices and through the offices of the agency bank. So RBI has increased the agency commission recently for the banks conducting the government business, such as the banks that are collecting the revenue receipts, that are doing the revenue payments and such. Any confusion here? So let's see some examples. Okay, so first of all, transactions that is relating to following government business undertaken by agency bank are eligible for agency commission paid by RBI. So if the agency bank is collecting the revenue receipts means the agency bank is collecting the taxes, the agency bank is collecting the direct taxes, indirect taxes, or let's say agency bank is collecting the fees, fines on behalf of the government, as well as the agency bank is making the payments, scholarship payments, as well as the payments for the subsidies, salaries. So these are the revenue payments on behalf of the central and state government. If the agency bank is doing it, the agency bank will get agency commission from the Reserve Bank of India. Next is pension payment in respect of central or state government. So central governments provide the pension, as well as state governments also provide the pension to their older employees. Okay, so basically the pension payments is done by the agency banks on behalf of the central or the state government. So for this, the agency bank get the agency commission from the RBI. Any other item or work specifically advised by Reserve Bank as eligible for agency commission. Okay, so this is the idea. Now agency banks also undertake the work related to small saving schemes. There is Sukanya Yojana, or there are various schemes that the government is running. Where do you deposit the money for the small saving schemes? You go to the bank, right? And the bank are promoting these kind of schemes of the government. So the agency banks also undertake the work related to small saving schemes, the commission for which is borne by the government of India. So for this particular case of the small saving schemes that are run by the government provides the commission also to the agency bank. So RBI do not provide the commission here. The government is providing the commission here to the banks. Though the settlement of commission on such small savings scheme is processed by RBI and settled at Central Account Section, Nagpur, the rates of agency commission related to small savings scheme transactions are decided by the Government of India. So basically, Government of India, in the case of small savings schemes, the Government of India provides the commission to the agency banks through Reserve Bank of India, but the commission is decided by the Government of India. Okay, so this is the idea. Agency commission claims on special deposit scheme related transactions are also settled at CAS Nagpur. So this is the basic idea. So basically, the Reserve Bank of India is providing the agency commission to the agency banks for these activities, but for the small saving schemes and for certain other functions, the government can provide the commission directly to the agency bank through the Reserve Bank of India. Okay, so now collection of so these are certain functions that are done by the agency bank, like collection of income tax or GST from citizens and business. Like if you work in somewhere, or let's say if you in the future you will work, right? So your salary, let's say your salary is 2 lakh rupees, 10% of that, let's say 10% has income tax you have to pay. So 20,000 income tax you are paying, so you will get 1,80,000, right? So the banks they deduct this 10% themselves, and then they provide you the rest of the money. So the banks are collecting the income tax on behalf of the government, or the GST also. Payment of subsidies, so banks pay the subsidies on behalf of the government, the LPG subsidies and the other subsidies for the fertilizer and such. Collection of state road taxes or land revenue, payment of salaries to the government employees or payment of subsidies that we have seen, disbursement of scholarship funded by the government. So this is the idea, that the agency banks collect the funds, or they get the receipts on behalf of the government, and they pay on behalf of the government. Okay, Now coming to the data points. So here the agency commission rates have been since reviewed and stand revised. So previously the rates applicable that was for the agency commission with effect from July 1, 2019 were these. These were the rates previously. Now as per the revision, the rates applicable with effect from April 1, 2025 for the agency commission is this. So these are the revised rates. So previously these were the rates, now they have been revised. So now for the receipts in the physical mode, let's say that income tax collection or tax collection is happening in the physical mode, or let's say the fee collection, or there is the land revenue collection is happening in the physical mode. That means the individual is going to the bank branch to deposit the money or to pay in the physical manner. Okay, so if the receipts are collected by the bank in the physical mode, in the cash mode, so in this case for per transaction the bank will be getting rupees 40 for per transaction, for per receipt that it is getting in the physical mode. If the receipts are in the e mode, in the electronic mode, let's say the ITR is being filled and the taxes are being paid in the electronic mode, so in this per transaction 12 rupees is given to the bank for per transaction. For per receipt 12 rupees is given to the bank. Okay, so receipts through the e mode. Then pension payments. If the bank is doing the pension payment, that means the bank is providing the pension to the people. Okay, so for per transaction the bank will be getting rupees 80 as the agency commission. In the case payments other than pension, let's say for the scholarship the payments are being made, for subsidies the payment are being made. Okay, so payments other than pension, so for that per rupees 100 that is given for the subsidies, for the scholarship, for the salary and such payments other than pension. So whatever payment the bank is giving, per 100 rupees they will be getting 7 paise per 100 rupees. Got it? This is the idea. So if the bank is receiving the money in the physical form, for per transaction the bank will get rupees 40. If the bank is receiving the money in the electronic form, per transaction bank will get rupees 12. If the bank is paying the pension, the bank will get rupees 80 for per transaction as the agency commission. If the bank is paying other than pension, like the bank is paying for the scholarship, subsidies, salaries, so bank will get 7 paise per 100 rupees that the bank is paying out, okay, as the agency commission. This is the idea. So if you compare the earlier norms and the earlier data points and the current data points, so you can see that for the receipts in the physical mode the agency commission has not changed, but for the receipts in e mode the agency commission was 9 rupees, now it is 12 rupees, so it has been increased. And for the pension payments the commission was 75 rupees, that has been increased to 80 rupees. And for the payments other than pension, before 6.5 paise per 100 rupees was given to the banks, to the agency banks, now 7 paise per 100 rupees is given. So for only for the physical mode the payment or the agency commission is same, but for the rest of the things that the bank is doing, the agency commission has been increased. Any confusion here? Any confusion, anyone? So the last point for today is that in addition to the above, it has been decided that agency commission may be paid on all payment transactions handled by the agency banks except those which are pre-funded by the government. So basically the RBI will pay the agency commission to all the agency banks for the payment that it is handling, but except those which are pre-funded, that means which are already given by the government to the agency bank. So RBI will pay the agency commission for all the transactions that the agency banks are handling for the government, but if the agency commission is given by the government, then RBI is not liable to pay any agency commission. It's not like that you are getting the salary for your work and then like from the institution and then you are getting extra money from your manager or from your boss. That does not happen, right? So that is what the RBI is saying, that if the agency banks are doing any transactions on behalf of the government, the agency commission will be given by the RBI, but if government has already paid, then RBI is not liable to pay any agency commission. As simple as that. Now coming to the questions, but before that let me show you that if, see, this is the perspective 360-degree series. So here you can see that this is the series that we are running for the answer writing practice. Okay, so this is the complete series for your answer writing practice, in which Jiskran sir is taking the sessions on Monday, Wednesday and Friday at 5 p.m. and through these sessions you will get the topic, that which topic is currently in news, and which topic is quite important. Recently the changes have been made, and how the question can come in the examination, as well as you can get the key points, that what you can write in the answers, how the body should be written, how the introduction should be written, how the conclusion should be written. So this is the perspective 360-degree series. Okay, so basically the perspective 360-degree series, this is for your answer writing practice, where you can get the questions that are on the current topics, and you will get that how the answer can be written, what are the key points that should be mentioned in the answer. Then you also get the question for your homework, which you can answer in the comment section, and that will get evaluated by the team within 48 hours. If you write the answer, the team evaluates the answer that you have written. Okay, so this is a very good series that helps you in the answer writing practice for your NABARD grade A or RBI grade B examination. Now coming to this question, I hope you will be easily able to answer this question. This is regarding your UPI handle or the UPI address of the SEBI, that the SEBI has recently said. Okay, now this is the second news article. I hope you will be easily able to answer this question also. So do try to answer these two questions. These are the homework questions, and if you have any confusion, you can write in the comment section below. So thank you everyone. Thank you for joining, and see you in the next session.